Well, to the markets now, and tough going from the start of today. The busiest day of the reporting season was trumped by global concerns over Chinese markets, the ASX falling more than 1.5%. In China, disclosures from some 30 companies that government-backed investors have taken stakes in them seems to have limited the worst of the losses, but still well into the red, and those shares without government support are still falling. The Australian dollar is down against all the major currencies. And Evan Lucas from IG Markets joins me now from Melbourne. Evan, we'll come to China in a moment, but a huge day for results, obviously. Among them, Qantas rewarding its very long-suffering shareholders.
Very much so, Tiki. Yeah, it was a very good day if you were a Qantas shareholder in terms of what they've reported to you. They actually had a fairly shocking finish to the day, unfortunately. They were up for most, but they did fall down. They're obviously looking at giving you a $505 million cash payback. That roughly equates to 23 cents. And profit before tax at $975 million is a massive turnaround from this time last year. So Alan Joyce had a big smile on his face today for obvious reasons. The other advantages he does have already is that the oil price is going lower still. Clearly you heard that from Grant King before in your previous story. So the first half of FY16 will also likely be a benefit to Qantas because costs are already heading lower still than what they were in FY15. Yeah,
swings and roundabouts, of course, but for Origin, as you're saying, Grant King, it's always going to be a tough day with those oil prices falling, but a drop of 13% on the market, that seems quite a big drop.
It's a big drop. However, the oil space as a whole had a horrible day. Tomorrow we actually see Santos reporting their numbers. They fell 5.5% to go with that almost 10% last Friday. They've fallen 3.5% for the week today, not including today. So Santos tomorrow is the biggest one in that oil space. It is all about whether or not they need capital or not. They're trying to tell you they don't. The market is obviously discounting that sort of theory and maybe looking to see a capital raising tomorrow, and that's why they're under a bit of pressure and why Origin, with the numbers they reported today, lost 13.5%. They'd actually been up for the week as people were expecting a slightly better than expected number today. Didn't get to deliver that.
Well, to China, wild swings yesterday in particular with a 6% range. Today we see the visible hand of the Chinese authorities back.
We do. The interesting thing about it is that it looks like it may have disappeared in the afternoon. They are actually down at around about 3.5% heading into the close. Yesterday, as you alluded to, that 200-day moving average in the Shanghai Composite is an incredibly strong level. It's almost like Li Keqiang's, similar to Mario Draghi's, whatever it takes line with regards to where the Shanghai market is at. But again, they look like they've dropped away today. So it's a very wild time. We thought it had gone away with the stability mechanism. Clearly, it's a question of whether it's there or not. And every time it looks like it's going, they come back, and then again today we look like it's not there. So very rough time in China, very much a lot of swings and roundabouts and very volatile in terms of how they're trading again.
Yeah, because briefly every time they sort of pull back it seems that the shares plunge again.
That's exactly right, and that's the question, is that how much money can they keep injecting to stabilise the market? There is now outflows going on with the fact that they've devalued their currency. So all of that is asking the question, do they have the funds to actually support their market?
Evan Lucas, thank you very much for joining us there.
Thanks, Vicky.